Told you before, we're going to say it again. If you're thinking about making a move as a loan officer, Geneva is a fantastic company. Broker, bank, home, office, big time company, small time feel. These are great guys. All you have to do is click this banner right over there. So NAR, the National Association of Realtors, is once again asking FHA to reduce their mortgage insurance premiums. Now, the reason is the housing market is healing from a foreclosure standpoint, but existing home sales had only a slight month-over increase, what the NAR calls a real disappointment.
Hey, we didn't make as much business last month, so come on, let's do something here. Yeah, and according to NAR, the reason it's been tough is because of affordability and tight inventory. So says the NAR.
Affordability and inventory. Well, let's think this thing through for just a couple of moments. Lowering FHA MI will not do anything with respect to inventory, right? And think about this. If FHA lowers their mortgage insurance, then the thinking is it will make homes more affordable, right? Because your FHA financing buying dollar will go further. So follow our logic here.
If lowering MI makes homes more affordable and as the NAR says, inventory is tight, then wouldn't more demand for fewer houses push home prices up and ultimately make them less affordable again? I mean, this is Econ 101. And this, by the way, is from Larry Yoon, the NAR's chief economist's own words. If he would have thought it through, his own logic disproves NAR's assertion. Lowering MI increases demand on limited inventory, pushes values up, and makes homes less affordable than a quarter basis point drop in an MI premium.
Larry, get with the program. Now, here's an interesting point if we're trying to find a way to kickstart housing. The American Enterprise Institute says that cutting real estate commissions would increase housing supply and lower home prices. Now think about it. NAR says lowering MI to kickstart housing, but lowering MI could put FHA at risk as a viable product. If you lower realtor commissions, no harm to the FHA, right?
Now, the American Enterprise Institute argues the problem is obviously too much loose lending fueled demand chasing too little supply. What is needed is not more demand, but more supply. This is where the NAR could help out. After all, Larry Yoon noted, affordability and the low availability of starter homes is still a major barrier. By cutting the average sales commission, NAR could lower the cost of selling a home, thereby enticing more homeowners to put their current property up for sale. This would increase supply, particularly at the lower end of the market, which would help first-time buyers who've been the most hard hit by the recent house price increases.
I can already see people smashing their monitors. But I gotta tell you, it does kind of make sense now, doesn't it? Now, what do you think, realtors? Let us know down below. Should the FHA lower MI and put FHA at risk of insolvency as a solution, or should NAR recommend cutting commissions by 2% across the board? Let us know down below, and do not curse at us. This is the American Enterprise proposal, not ours.
Okay, now back to NAR's recommendation to lower MI. Whatever they're paying Larry, I think it might be too much. I mean, you gotta think this thing through. Truth be told, any lowering of the FHA MI should be based entirely on FHA's MI fund and FHA's overall solvency and not market conditions. With that said, I think you can make a stronger argument that FHA's MI should stay right where it is.
But being the NAR, a massive baritoning voice on the Hill, they'll probably get it lowered and they will completely sidestep the whole idea of lowering commissions. Now, the message I'd like to hear from NAR to FHA is to tell them, HUD, and the DOJ to quit suing lenders, because the biggest threat to FHA as a widely used product for consumers and the housing industry to use is the number of lenders still in the FHA game. That will be determined by lawsuits, not MI rates.
Senator Richard Shelby, the chair of the Senate Banking Committee, is calling for an investigation of Fannie and Freddie and FHFA to see how they are overseeing the GSEs. He's asked the comptroller to head up an investigation on the FHFA and any current and future financial demands on the Treasury.
Well, Richard, we think we might be able to help you out over here. Currently, the Treasury is making money off the GSEs that would make the mafia blush. And provided things don't change, neither will the profits to the Treasury and presumably the taxpayers.
Shelby goes on to say, it's my hope that the GOA and the CBO will provide the committee with meaningful data regarding the market impact of FHFA's decisions to ensure that Congress takes steps to protect American taxpayers from risk.
Hey, is he serious? Is this guy really is he serious? Is Shelby soapboxing about protecting taxpayers while at the very same moment Fannie and Freddie investors are suing them because profits they should make off their investment are being swept up by the Treasury? Is that what's going on here? Unbelievable. Listen, if we got this wrong, let us know where, because only in Washington can you double your money and then complain about lost money. Again, where did we go wrong? Please, somebody, let us know down below.
Again, realtors, don't shoot the messengers. It's not us, but it's out there.
Well, that's an interesting point, though. You know, you got NAR advocating, saying, well, we got to do something to kind of kickstart housing, and lowering MI would be good because it'll bring more people to the table, which, as we've shown, it creates its own set of problems. But if you did lower commissions by 2%, it would bring more inventory, which is one of Larry's 2 points.
Right, you could lower values and make things more affordable and get people into more
What do you guys think?
What do you know?
I can already just see this. We're gonna have keyboard assassins destroying us.
They're gonna print pictures of us and throw darts at us on the wall. We're the messengers. You guys have a great day. Forward, share, and subscribe in your upper right-hand corner. We'll catch you later here at the National Real Estate Post.
Bye.
Bye.